These days, with the synthetic IDs, it's very easy for the fraudster to bypass the system check.
Detection and reporting, both the things would go hand in hand.
Now with AI tooling, I can send out 10,000 or 100,000 fake invoices per day.
Digital frauds, if you really look in today's era, it's no more. It doesn't look like a back office problem anymore, especially for NBFCs. It is something which has now become a real-time trust challenge, starting from identity management to onboarding to customer payments to communication, and at a much larger scale when it comes to institutional collaboration. What really makes this problem more complex is the technologies which we are using for digital growth, like AI, data, automation, making customer experiences hyper-localized, hyper-personalized. These technologies are also at the same time being used by fraudsters for things like what we call it is social engineering or synthetic IDs. We are seeing more and more of them. So now, what I thought is asking this eminent panel with us a question about whether the landscape of fraud is evolving may not be the right question, because it clearly is. What is more important to ask this panel today is to understand whether the conventional controls, the models, the collaboration, is it evolving fast to keep up the pace? So with that, I invite this panel today to have this engaging discussion. What I have thought today is to really have this discussion around 4 themes. One is how this landscape of threats is evolving. What are we doing in terms of making defense more real-time? Third is, how is the space of KYC and AML evolving in the NBFC space? And last but not the least is, are we really doing enough for institutional collaboration? So with that, let's dive straight in. And to begin with, and to break the ice amongst ourselves, I will start with a question which is equally applicable for all the panelists, and I will request them to share their perspectives on these. So my first question to this entire panel is, and maybe Nishant, we can start with you. What is the one shift in digital fraud that leaders can no longer afford to ignore?
Okay, thank you so much for having me here. I think one thing which actually the answer is well within the question itself. One thing which is there in the digital fraud. So we can't ignore that the fraud has shifted from a conventional traditional fraud to a digital fraud, which is no longer in isolation. The fraudster does not enter the system basis of doing a transactional fraud, but they actually enter the system. They exploit all the channels, juice up the entire system. That's the dynamism of the fraud these days. I think that's a shift which is there. It's no longer an identity fraud, but it's the entire life cycle of the fraud is basically what is a great shift which is there. So at the same time, we also need to become more dynamic. I mean, that's a shift we also need to look at. I mean, we also need to shift from a traditional conventional checks to a more dynamic control compliance.
Thanks, Nishant. Maybe Vinay, your views on this question.
Yeah, thank you for inviting for this panel. To answer this question, I will first mention that cybercrime itself is a 10+ trillion economy, and it's growing day by day. So AI enabler has advanced the fraudsters to use AI-enabled tools and enhance their models to look the almost real for the customers, and to detect these frauds we must enhance our defense systems to detect the deepfakes and to arrest the losses to the customers. And this is the most important thing for the top CEOs to how to defend against these digital frauds. I think that's from my.
Okay, thanks Vinay. I think we have got perspectives from two, I would say, fintechs. But now we have a more diverse panelist over here who brings in insights as a founder. So Max, how would you see this space evolving and what are your views on it?
So I think what's happened is there's been a huge increase in the scale of fraud and the availability of tools to scammers. So let's imagine that I am a fraudster, right, for once. And I want to go out and I want to run a big invoice scam, or I want to go and run a big piece of digital financial fraud. 5 years ago, I could send 1 or 2 fake invoices a day, or maybe 10 fake invoices a day. Now with AI tooling, I can send out 10,000 or 100,000 fake invoices per day. I can use voice cloning to impersonate an employee at a company. Or I can use video cloning to get on a video call and pretend to be someone else, right? So the tools that are available to fraudsters have got a lot better. They're available to all of us as well for productive means, but the tools that are available to fraudsters have got so much better. And the scale at which fraud can operate is so large. So that's why we need to do something about it, right? That's why the landscape is shifting, and that's why we need to find a solution. Thanks.
Interesting perspectives, Max. And now we have our last panelist who brings in experience from a bank. So we have Fintech, we have a founder, and now we have Sashikant, who represents a bank as a chief compliance officer. So what do you think, Sashikant, on this topic?
Yeah, thanks. I think from a bank's perspective, it's the RTTM, that is the real-time transaction monitoring. That is something which we cannot afford to ignore on digital frauds. Right now on this UPI platform, crores of transactions happen in seconds. And also the mule accounts are used for these digital frauds. So real-time transaction monitoring is something is of primary importance to all of us as bankers.
Thanks again, Sashikant, for those inputs. Now, I think one thing you would have already judged by now, having heard the entire panel, is that this panel brings in experience and perspectives from very, very different and diverse backgrounds, ranging from compliance to cybersecurity to privacy to policy. So I think I would like to make most of this time of spending some time with this panel and dive deeper into the 4 themes which I have planned for today's discussion. So let me again start back with you, Nishant. A question which has been tailored specifically for you. Where are traditional compliance controls struggling most against modern digital frauds?
Nice question, actually, Sumit. The traditional compliance controls, they have been serving well. They have served the industry well for last couple of decades. But now, with the fraud becoming more and more dynamic, yes, these controls, compliance controls, are now actually they are struggling to keep pace with the dynamic frauds, because these controls were basically, they were based on static rules, more for the documentary frauds. There was manual intervention, manual reconciliation, periodic fixed time audits were there. But these days, the fraud has become too dynamic, which is driven by the system and the behavior rather than a document. So the fraudster enters the system, stays in the system. The traditional controls were basically to stop the entry of the fraudster. These days, with the synthetic IDs, it's very easy for the fraudster to bypass the system checks, onboard the system, and then do a cross-functional frauds, go into all the gaps. They exploit every nook and corner, which is the loose end of the system. So it is more of a behavioral fraud, which these traditional compliance controls were not capable of catching up. That's one. And other thing is, there are a lot of channels within the organization which have been working in silos and which still work in silos, I must admit. These traditional controls cannot catch those cross-functional frauds, which are cross-channel compliance, I must say. So I think with this, the time has also come that we need to actually develop systems which are also controls frameworks which are more dynamic and which can actually prevent the cross-channel frauds. Now, if I have to take an example, so there's a lag between if I say this, there's an onboarding which is very smooth because the fraudster, they use synthetic IDs. These are the real looking IDs. Then the profile is very much real. The onboarding is very seamless and very comfortable, very clean onboarding is there. But it's the behavioral stuff which is dirty actually. These traditional controls cannot capture that. And plus there's a lag between I would say suspicion, detection, decision making, and then taking action. Because once the fraudster gets onboarded, then he exploits the gaps. By the time we realize it, all the channels are exploited, and with the payment transfers becoming so quick and fast, by the time we realize and take action, the loss is already done. So this is where the traditional control measures failed. So I remember that there was this fill it, shut it, forget it. So now we no longer can have those measures like take an ID and keep it, verify it, store it, and forget it. I mean, we have to track the entire life cycle, the entire journey of a customer to ensure that there's no fraud at any stage as of now. So I think this is where the traditional measures they fail.
Thanks, Nishant. I think you touched some of the very important points which most of us would agree. Things like synthetic IDs, speed with which these frauds are being perpetrated. So definitely the old frameworks which were there in the organizations, they are somehow falling short of the expectations which we have. And this is where professionals like you will have to step up to make sure that we are keeping pace with this evolving landscape of how frauds are committed. Moving on to Vinay, I think Vinay brings in a very interesting background. Apart from being a chief compliance officer, he also has a background in information security, and at the same time, he's also the privacy officer. So I'm tempted to ask this question, which is at the confluence of two important topics, which is frauds and privacy. So Vinay, question to you is, how do you really balance fraud detection with privacy by design?
That's a good question. Privacy by design and the fraud detection are now both are important considering the implementation of Privacy Act in India. We have to build our fraud detection systems which minimizes the data collection, process the data, and storage of the same in the geographical location of India, which also enhance the effective detection of fraud against deepfakes, synthetic identities, and enabled scams. As of now, we are doing collect everything and centralize analysis. Now we have to shift it to decentralization using the privacy-enabled technologies, risk-based analysis, and explainable process. So the core principle for this is data minimization. So whatever required for analysis of or detection of the fraud is to be collected or shared with the processor. Then purpose limitation. As per the DPDP Act, we have to explicitly share the purpose for which data is being collected, so that limitation should be implemented. Third is transferability. So transparency should be there, what for purpose we are using and how we are using this data. Data should be anonymized so that whenever required, only should be remapped to the particular customer or consumer or individuals. And accountability should be there to ensure the conduct of privacy impact assessment. These privacy enhanced technologies are to implemented to ensure the data are used to train the AI model for better detection of frauds. Those are federated learnings. Federated learning is like it's a decentralized learning, and AI models are to be trained at the decentralized environment or devices or the banks or financial institutions where the data is there, without revealing the raw data or leaving the raw data from the center. Second is synthetic data. Synthetic data should be generated which look like real data to train the AI models. Then differential privacy, which ensures that we have to add a noise to the data so that it cannot be identified as a PI. Then homographic encryption should be used, which analyze the encrypted data without divulging the raw data. And on-device processing, that whenever we use video KYC or biometric on the mobile devices, it should be analyzed at the device itself and should not move from the device. Only the end result should be transferred to the agency. So this should be implemented to ensure the privacy by design and fraud detection.
Thank you, Vinay. I think very, very relevant inputs on this topic, especially this space is evolving very fast, given India has its own Privacy Act now, and whatever you think now, be it fraud or be it anything else, you have to keep that privacy lens in mind, because that's going to be like the foundation of everything and anything we do going forward in our respective businesses. One topic which today I see it as a horizontal, which cuts across domain no matter what you do, is AI. And when we talk of frauds, I won't be doing enough justice to this topic if we don't touch where does AI come in when we talk of fraud prevention. And so I will use this opportunity to request Max to share his perspectives on where does he see AI bringing in measurable value in preventing frauds.
Yeah, so great question. A lot of talk around fraud is obviously often from the risk side. So we're thinking about what can we lose, what can the consumers lose, or what can the businesses lose. But I think the more interesting piece is what is there to gain. So if we can do really safe transactions, for example, if we can do really safe property transactions or really safe financial transactions, and we can do them in seconds in a way that minimizes the potential of fraud, then we can deliver better services for customers, and we can reduce overall bureaucracy and paperwork. So that's kind of the first goal. But now think about where AI agents come into that. So right now, a lot of the paperwork, a lot of the manual work has to be done by us. But we can delegate that as a consumer to an AI agent. So for example, if we have a safe, loan infrastructure or safe property infrastructure, we can ask an AI agent to rent a house for us, or to purchase a house, or to take out a loan. And the AI agent can go and process those documents, make sure it meets all of the compliances, do all of the negotiation, transfer the necessary information, and with minimal effort, deliver incredible value to the end user. So I think we're entering this very, very interesting space where if we can reduce fraud in our transactions, then we can allow AI to operate on those transactions, and we can be able to automate a lot and reduce a lot of paperwork and bureaucracy.
Yeah. Thanks, Max, for coming in with those perspectives on AI. Shashi, I will now move on to you. And while Nishant spoke about where does these traditional compliance controls fall short, I will request you to zoom in a bit more on KYC and AML controls, the way you have been looking at them conventionally, and where do they really fall short in today's era of digital frauds?
Good question. Conventionally, actually, if we talk about KYC, AML, so it becomes more of KYD, not KYC. It's not know your customer, it's like know your documents. So there where it falls short of it. Typically the fraudsters who come to a bank branch to open an account, he will be full with all the required documents. And you can find it out that all the documents are proper and nothing is wrong. Somebody mentioned about synthetic identity. Yes, they use the synthetic identities also. So in typical conventional system, it's difficult to identify all these things. If I talk about AML, yes, FIO gives us some red flag indicators, RFIs, where the banks, they configure it. 176 RFIs are configured into the system, and the system, looks into it and throws alerts on next day, and it comes in hundreds, thousands, based on the number of transactions that particular bank would be having. Right, but it is a post-mortem exercise. It's not a real-time exercise, another gap. So that's why I insisted on this real-time transaction monitoring, which nowadays, RBI is also insisting. All of you must have experienced this, that, if you do a transaction of, let's say, late night, 1 lakh rupees, you do a transaction, immediately you get a call from the bank or something. And, similarly, during daytime also, you do a transaction of 5 lakh rupees, you get a call from the bank. Have you done this transaction? These are called real-time transaction monitoring. These things were missing in conventional KYC AML systems. And also, if I talk about cross-border wire transfer cross-border transactions, the conventional system was also lacking on many aspects. So, we need to have some proper controls to identify the proper bill of lading, then the bill of entry, bill of lading, and all these things should be proper. The custom certificate should be proper. All these things can be easily generated through AI right now. The AI can generate a passport also nowadays. So again, another example of a synthetic document. So these are the typical gaps we face as a bank. And going ahead, real-time transaction monitoring, and probably, assigning a credit risk rating for each and every transaction, for each and every customer. That is something would be required, and many banks are doing right now. So each and every transaction undergoes through these, and there is a threshold. Beyond that threshold, obviously, it throws an alert, and banks are alerted to file the suspected transaction report to FIU India, and further, it goes further. So there are many aspects of it. So I just pointed out 2-3 which are very crucial.
Thanks, Sashi, and especially that point on real-time KYC. That's so important and relevant in today's era. I would like to continue on this topic of KYC a bit more because we all would agree that this is so important in the entire business of banking. I will move on to Nishant. So Nishant, we all know KYC, we have always known KYC as a one-time exercise. When you start your relationship with any financial institution, that is when KYC kicks in. But how do you see the relevance of continuous KYC picking up, and where do you see as part of the entire banking processes going forward?
If I have to answer your question, I think the continuous KYC is the need of hour. Taking one-time KYC and then depending on that, I think that stage is long over, long gone. So the fraudster is not here now to take a friend's DL and change his name, put whitener or a correction fluid on that and change the photograph. No, that's not there. I mean, I still remember our old days. We used to have repositories and albums where we would have KYC documents, like how does a driving license look like, how a driving license issued from Andhra Pradesh looks like vis-a-vis a driving license issued by the Punjab state government. I mean, we would, in case of a suspicion, we would hit back to the album to see the fonts and the features of that KYC document. So, but now in the digital world and especially supported by AI, we can't depend on one-time KYC. Because for the fraudster, it's so easy to actually fabricate that KYC, and unlike the earlier days when the fraudster would fabricate the KYC, exploit the system, and immediately the fraudster would want to get out of the system. Now, with the synthetic IDs or the real-looking real-looking profiles, the fraudster, as I said earlier also, the fraudster is here to stay to exploit all the gaps and the channels. So we have to take the confidential, continuous KYC documents. We have to keep on, going back to these KYC documents, keep on verifying these documents with the help of the systems. So we can't store it and forget it. And there has to be a system where we track these IDs depending on the scores we need to build in. We have to track the behavior. We have to see how the customer behaves, how give a score basis the geotagging of these IDs, and probably do a device tracking. We have to develop all the possible early warning signals. And basis this EWS, we further have to divide it into high risk or medium risk or low risk metrics. And I would also want to add one thing, Sumit, here, that we have to change, while I'm answering your question, we have to change our mindsets also. Because when we talk about continuous scoring of these KYC IDs, we think that these will create frictions among the customers. But let me tell you, I don't think that this will create a friction. Rather, there would be additional checks for the high-risk customer. At the same time, there would be seamless or a frictionless service to the customers with a low-risk score. I think we would be able to serve those customers much better. And especially in NBFCs, which are like MFI or MSME NBFCs, like if I take example of Fusion. So MFI or micro MSME customers, we would be able to cater them better in case let's say we have to do some intervention. Now earlier there used to be a blanket intervention. Now depending on the risk scoring and the behavioral pattern, we would be able to do a targeted intervention rather than a blanket intervention. So in a way we would be able to safely help our customers better. I think that's how it will help.
Thanks Nishant. I think pretty elaborate response to that question and brings in a lot of clarity for the audience out here. Moving on to Vinay. And Vinay, when I think of you, I can't really I'm tempted to ask you questions around privacy because you bring in that side of the business on this panel. So collaboration is something which is being talked about a lot, especially when it comes to sharing of fraud intelligence. But when you look at it from privacy lens, what guardrails around privacy and data sharing can you think of when it really comes to promoting intelligence on fraud?
Yeah, Sumit, very relevant questions in the current scenario. Since AI, I think it's in the discussion of each and every panel, I think today, without AI, the discussion did not happen. And since AI is now coming into place in everywhere, so we have to put the guardrails to protect our data and the privacy. So considering the implementation of privacy law, we have to play the dual regulatory requirement and landscape for the DPDP Act and the regulatory requirement like RBI and SEBI. So there are few things we have to implement to protect this data and privacy, like a legal basis and purpose limitation. Legal basis is as per DPDP, you should have explicit consent to process data, personal data, and for the legitimate use. When the legitimate use is defined, it should for prevention, detection, and investigation of offences. And an institution has to legitimize to this use by clearly defining this detection of frauds. Then notices to be given to the users or customers for which data has been collected before the implementation of data, so that they are aware of that their data which were earlier collected is being used for the detection of frauds. Second is technical safeguards and use of privacy enhancing technologies like anonymization. Data should be anonymized so that it cannot be directly linked to any person unless there is clear fraud is detected. Second is data minimization. Only required data has to be processed for the fraud detection mechanism. And mandatory encryption has to be implemented at all levels to protect the data, whether it is in transit, at rest, or in process. Then accountability should also be put in place to ensure the implication of the DPDP Act, where when a institution is identified as a significant data fiduciary, they have to be very strong implementation to be implemented, like assigning or posting of data protection officer, then data protection impact assessment, and audits, continuous audit has to be implemented. Then as RBI suggested, mobile number revocation list is to be used by the financial institution to clean their database so that they can identify it towards the mule accounts. Then breach reporting, as per the DPDP, breach, if it is happened, has to be reported to the data protection board within 72 hours. And the third party and the processor guardrails are must required. This is strict contracts, because the processor has no liability towards the data protection, but the data fiduciary has. So as a data fiduciary, you must have a strong contracts so that the liability remains shared with the data processor also, and he implements the required safeguards. And the liability framework. The liability should also be defined in the contract so that there should not be unlimited liability towards the both of the things. That should be implemented from my side.
Thanks, Vinay. Coming to back again, You spoke about how AI is acting in defense against fraud. Now I will request you to talk about a bit more on how generative AI is being used in perpetrating frauds. What are those fraud tactics which are being seen on a rise because of Gen AI?
Yeah, so we see a lot in terms of generative AI being used for fraud. So one way it could be used is AI agents generating a whole bunch of documents and sending those out for signing. And we see identity fraud in that space as well. So someone pretending to be someone else and sending out documents. At Lumin, we're a document signing company and a document processing company. We help a lot of companies with workflows. So what we do in that case is we try to tie the documents to an identity. Because if we can tie the documents to an identity, that can help to prevent someone doing kind of mass identity fraud. The other place we see a lot of fraud happening is kind of in the HR space, where people are applying to jobs and they're actually pretending to be someone else, right, to infiltrate a company. So one of our partners had an example recently where they were hiring a new employee, and that new employee fully faked their identity, right? Everything from kind of the way they looked, the whole lot, right? Their CV, everything was fake. And so for these types of documents, we really want to try to figure out how do we tie identity for things like, people's CVs or their resumes. And when someone joins a company, through the HR process, how can we kind of make sure that before they join a company, they go through those KYC checks, and especially that they're done really, really early. Some of our other panelists mentioned today that fraud prevention is a full life cycle issue, and we've got a few people up here on the banks that are talking about preventing it at the banking level, but really the fraud should never get to the banking level. The fraud should be eliminated before that. And so we need to think about full life cycle fraud prevention, and we need to make sure that even those early steps, like that first signing of a contract or that first letter to engage, is checked against an identity, so that we don't have to depend 100% on the banks to prevent that fraud. Of course, we still need those safety nets there, so if fraud is happening, it gets stopped at the transaction level as well. Thank you.
Thanks. Thanks, Max. I think one thing we all would agree is that frauds are there to stay, and AI is there to stay as well. And this tussle of speed and perfection will go hand in hand on both defense and attack side. So I think what we have seen till now is just the tip of the iceberg. There's a lot to unfold in the years to come, both on defense and at the same time on the attack side. With that, I will move on to Shashi, and this would be my last question for the panel today. Shashi, we have spoken a lot on theoretical terms, but I would like you to throw some practical light about what happens on ground, and what do you feel is more harder in practice? Is it detecting the fraud accurately, or responding operationally at the speed which today's fraud really demand?
Yeah, this is a good question. I always give this example. These frauds and the fraudsters. It's like the typical TV serial all of us must have watched, Tom and Jerry. That mouse is always ahead of the cat. The cat is always running to catch the mouse, and the mouse does some tricks and goes out. If he catches in one point, then he raises his head somewhere else. So it's like this. The fraudsters are like this. If you try to catch one fraud, that maybe the digital arrest fraud, they will come up with a PNG type of a fraud, PNG bill type of a fraud. If you solve that, they will come up with electricity bill type of a fraud. So it's like never ending. So okay, the question is that detection and reporting, both the things should go hand in hand. And then proactive detection, how it will help. maybe we can use AI to have a predictive model. As I mentioned earlier also, we can give a risk rating to each transaction, each customer, each type of product in the bank. So, and also in different, to the AI, what happens if you overuse the AI, it will generate a lot of false alerts also. So, in the process, we may be blocking genuine transactions also of customers. So, we face that dilemma, blocking genuine transactions or, reporting these transactions. Recently, DOT, Department of Telecommunications, they have come up with a list of, mobile numbers. They have asked all the banks to see where they have asked the banks to, they have blocked those mobile numbers with the SIM providers, telecom providers. And the banks need to do that sanity checking while onboarding customers, and also to, this is another area where we can really improve ourselves in fraud prevention, we can say, detection. And the third area is where, at the time of onboarding, we have got a lot of sanctions list and all these things. So we need to really scrutinize those things with the help of AI and try to, eliminate the, try to prevent the forthcoming frauds which may happen in future. So net, what I would say that, prevention, detection, reporting, all these things go hand in hand. So we just cannot, we'll have to live with it. Thank you.
Thanks, Sashikant. I think interesting analogy of Tom and Jerry, but so relevant for the topic of today's discussion. So what we have heard today is that digital fraud is not just a control issue, it's an identity issue, it's a trust issue, and overall it's an ecosystem issue, I would say. And increasingly, I would say this is gaining importance more than ever. I made some notes in terms of what few themes we have created out of today's discussion. And clearly, frauds today are becoming more intelligent and personalized. And we are seeing that with that evolution, defense also has to step up, and they have to become more real-time and more collaborative. And institutions today have to leverage more of AI, governance, privacy, and shared intelligence more than they have been doing until now. Fraudsters already are operating across channels and institutions, and I think the defenders will also have to do the same, but more lawfully and at scale. So with that, I will call this session to an end, and thank to all my panelists, and thank you to the audience. I honestly enjoyed this discussion very much, especially given the diversity of the experience which this panel brought on the stage and the topics they spoke about. Thank you once again, everyone.
Thank you so much. Can we hear a big round of applause for our panelists? Thank you for that insightful discussion on strengthening trust and security in digital financial ecosystem. And now may I request our moderator, Mr. Sumit Sharma, to kindly felicitate the panelists with a memento. Let's hear a big round of applause, ladies and gentlemen. Mr. Nishant Monga, Chief Compliance Officer at Fusion Finance Limited. Mr. Vinay Shah, Chief Information Security Officer and DPO at OPL. Let's hear a big round of applause, ladies and gentlemen. Mr. Max Ferguson, CEO and founder at Lumin. Mr. Sashikant Panda, Chief Compliance Officer and Principal Officer, Sberbank, India. Now may I request Ms. Charanjeet Kaur from Exhibitions India Group to kindly felicitate our moderator, Mr. Sumit Sharma, Director, Digital Trust, KPMG.